no secret method for any of this stuff. You just have to be aware of concepts that's smart in their application, and it helps to be an old man so that you have the experience that helps, or an old woman even. But you know, if you're a value investor and you invest whenever you find a stock which is selling for a third less than your estimate of intrinsic value, and you say, I don't care about the macro, ignore the macro, ignore what I call the temperature of the market, then you're kind of acting as if the world is always the same, and the desirability of making investments is always the same. But the world changes radically, and sometimes the investing world is highly hospitable when prices are depressed, and sometimes it's very hostile when prices are elevated. And I guess what you're saying is, well, we just look at the micro. We look at them one stock at a time. We buy them whenever they're cheap. I can't argue with that. On the other hand, it's much easier to make money when the world is depressed, because when it stops being depressed, it's like a compressed spring that comes back. So if you buy a cheap stock when the market is high, it's a challenge, because if market being high is followed by a general decline in prices, then for you to make money in your cheap stock, you have to swim against the tide. If you buy when the market is low, and that lowness is going to be corrected by a general inflation, and you buy your cheap stock, then you have the tailwind in your favor. So I think it's unrealistic and maybe hubristic to say, I don't care about what's going on in the world. I know a cheap stock when I see one. And if you don't follow the pendulum and understand the cycle, then that implies that you always invest as much money as aggressively. That doesn't make any sense to me. I've been around too long to think that that a good investment is always equally good all the time, regardless of the climate.